You have been among the more cautious committee members of late, selling down some positions that you had in some very big names. And I look up today and I see that you have sold DocuSign. Tell me.
Yep. Well, I think a lot of the stocks, Scott, that did so well during the lockdown, they're tremendous stocks. DocuSign, Zoom, which Josh made a great call on, Teladoc, all of these. I think they're great stocks. But I think a lot of them are going to have a hard time justifying their multiples, even in a time when people are just reaching for anything. So I took some profits in a number of those stocks, as you described, being more cautious. Put a bunch of that money into Bitcoin, was pretty happy about that trade. And as far as DocuSign, still believe in it, Scott. Still think this one goes, does very well in the competitive space, but don't think that it continues to get the sort of love that it and many of those stocks that I just named got last year. So for that reason, I decided, you know what? If I own this one again, I'll probably just own it through options rather than through stocks.
So it's interesting to hear that, Doc. And Steph, this speaks, I think, to some of the underlying risk that's out there. You've got some election risk, right, because of what's happening down in Georgia. You have some vaccine risk because the slower rollout than expected. You've got maybe a larger number of people who are not taking the vaccine who are even eligible to do that. And then, as John just said, maybe you have some valuation risk as well. Some stocks just deemed to be too expensive. John sells DocuSign. Maybe some others are now taking stock, if you will, of the kinds of names they have in that same stratosphere. So how do you put that all together?
Well, it's sort of interesting. First and foremost, we always worry about something, right? And so I'm the most concerned about the election and the short term. I would be looking to buy any weakness if we get a blue wave versus what the market is expecting from the Georgia elections, which is the Republican win. The Republican win is a good thing for investors because we've talked about it. It's gridlock. Not much gets done. A blue wave, it introduces uncertainty, more taxes, more regulation. Why I would be buying on the short term in that case, in that scenario, is because I don't know how much in terms of tax increases you're going to get in this COVID world, particularly if vaccines are getting delayed, right? That's number one. Number two, you're likely to get more stimulus. And number three, you're likely to get an infrastructure package. So you've got these puts and takes in a blue wave scenario, but I would be a buyer there. And as I would just mention, I think we've talked about this a lot, though, all the stimulus that got put in place last year, it takes about 10 to 12 months to flow into the economy, into the system. So we haven't really even begun to see the benefits. And I agree with Goldman's Costin that all this stimulus is going to lead to better GDP growth and better earnings growth. I do think a 30% S&P 500 earnings growth for 2021 is very realistic. And at the same time, I agree with Merrill Lynch in that you want to rotate. And so much of what John is doing, he's selling some of the high flyers. Me too. I sold some Nike. I sold some UPS. I sold some Home Depot and D.R. Horton. And I'm looking for the laggards. And so I'm buying VF Corp and TJX and some semiconductor companies and some banks. So that's kind of what I'm doing as well. And I think John and I are probably saying the same thing, actually.
Okay. So, you reference Goldman's Costin, right? He goes to a 14% return for 2021 for equities. 4,300 is his number. Bank of America, Savita Subramanian, EPS going to be down, but S&P is going to be up 18%. So just, so everybody knows what we're all on the same page. And as for, Josh, the election risk, which is front and center, Barclays said, well, the options market indicates investors are not particularly worried about it. And they tend to agree, even if the Democrats win both seats. Gridlock is going to be the most likely outcome for the next few years. That is likely going to be good for the markets. You've laid out the case of late, a pretty positive one, of the things that you've seen, whether it's different areas of the market that were poised for a breakout, things that the widening breadth of the market. What about now, the here and now, about any concerns that you may have?
So I'm investing for people with time horizons of anywhere from 20 to 70 years, like literally 20 to 70 years. So when I hear about what a blue wave will do to stocks this week, like I kind of look at it, it's not a risk, it's an opportunity. I'm a buyer of stocks all year, so I'd rather buy them lower. So that's not actually a real risk. Could it introduce volatility, Scott? 100%. But so what? Because if we weren't worried about that, we'd be worried about some other thing. It's always going to be something. Stephanie made the accurate point. So I think what we want to be thinking about is not, oh no, what happens if a blue wave? What do you buy if you have that volatility introduced because of an election? In my 20-plus years on the street, I've never met a successful investor who would chalk up his or her success long-term to betting accurately on elections. Go find me one. Can't do it.
Okay.
So I'm thinking about what I want to buy. I'm not thinking about, oh, no, are we going to get volatility because of 2 Senate seats in Georgia? I'm just not there mentally.
I love it.
I don't really think people should be.